me if you're on YouTube or Bigger Pockets? Please let me know that you are there, because I can't hear back from you. Can you hear me? And are you on? So anyway, I'm Paul Moore, and today we're going to talk about why real estate investors are sleeping well in the midst of all this craziness out there. Have you guys seen? Of course you've seen what's going on. You guys have been watching the markets. You're probably not obsessed with the markets, but you are watching the markets. You're seeing everything that's going on. Okay, so Dude Real Estate says, I can hear you loud and clear. Hey, Dan Chevreau, AML, Mac Tracks. Okay, so awesome to see all you guys. Okay, so tell me where you're from and what you do. And I want to introduce my friends. Dude Real Estate is Nate Shields. Nate Shields is a real estate investor. He's a realtor. He's an entrepreneur. He's just a great guy. And he used to be in the Chicago suburbs, but he fled. Oh, did I say that? He got out and moved to Madison, Wisconsin several months ago. So anyway, so if you have questions, Dude Real Estate can help you answer those questions. I'm going to be introducing another friend of mine today as well. I don't know Matt Riccardella. Matt Riccardella is from Crystal View Capital. And Matt, please tell me your ID so I know who you are. So excited that you guys will be online with me today. So today we're going to be talking about this crazy market. But before we do, as is our tradition, I'm going to go over 10 reasons not to invest in real estate. Number one reason not to invest in real estate. No one's actually becoming a millionaire investing in real estate, right? Okay. Number two, wait, actually 90% of the world's millionaires have become millionaires through investing in real estate. I didn't write that. I don't know if it's true. You'd rather be among the 10% because you're a rare bird and you like to stay that way. Thank you very much. Number three reason not to invest in real estate. You've got a brilliant idea for the next big thing. It's the Facebook meets Uber, meets Twitter, meets Salesforce of the bumper sticker world. Everyone's going to want one and you'd rather sink all your money into that. Number four, you prefer giving your money to panhandlers. They seem super nice. Number five, you want to work for your money rather than make your money work for you. Number six reason not to invest in real estate. You don't want to invest in anything that could make you more than 10% returns because, hey, that's just kind of greedy, isn't it? Number seven reason not to invest in real estate. You hate rainbows and unicorns and anything fun. Number eight, saving 3% or so of your earnings will be more than enough for your retirement. No need to make any additional money. Number nine, no one ever taught you about real estate in school, so it must not be that important, right? That's my favorite. Number 10 reason not to invest in real estate. All the richest and most successful people in the world are investing in real estate, and you certainly don't want to be associated with them, right? All right, so there we go. So excited that you guys are all on here, and man, we have a great turnout today. We're right here in the middle of the day. We barely got any notice, and here we are. So thank you for joining us. So Matt Riccardella, where are you, my friend? Matt Riccardella is an amazing commercial real estate syndicator with Crystal View Capital. He's going to join us today. We also have Dude Real Estate. That's Nate Shields. I've already introduced him. And now we're going to talk about what everybody's talking about, this crazy coronavirus. So here's what we're going to do. We're going to talk about the coronavirus briefly, the stock market meltdown briefly, and then we're going to throw it wide open for Q&A. So I'm hoping that you guys have some great questions, and I'm going to have Dude Real Estate answering many of your questions, and Matt Riccardella as well will be helping out because I can't keep up. All right, you guys are amazing. So, hey, by the way, if you like what we're doing here, if this is helpful, please give a thumbs up or a like or a share or whatever you guys do on your platform. It will help BiggerPockets and YouTube know that this is helpful content. So, look, folks, you've probably heard most of this already, but 60,000 people die every year from the flu. And 3,000, tragically, have died from the coronavirus in the whole world. And so, those things could change for sure. Right now, it looks like that the problem with the coronavirus, one of many problems, okay, one of many, is that Chinese workers are quarantined right now. They're not making chips. They're not making bumper stickers. They're not producing medicine and prescriptions and all kinds of things that that the supply chain needs. So Apple, Microsoft, Dell, all these companies, the auto companies, because these employees in China are being quarantined right now, they're not making all this stuff. And so it is causing a real problem for these tech companies and a whole lot of other companies. Now, that is eventually going to trickle down into everything if this keeps up, okay? But these things, these supply chain issues, they don't affect commercial real estate. They don't affect residential real estate. Of course, if it gets much, much worse, it could, and we should all be ready for that possibility. But today, it's not affecting it. And so the question is, why are the stock markets tanking? Well, let's look at this. People view stocks and they view a lot of these investments as things they can get into and get out of based on the moment, based on what they're feeling and thinking that day. I read a book back in my MBA program that said that 93% of people who invest in stocks lose money. But folks, look at the stock market. Look at the trends. It's gone up over and over and over. And Daniel, I do not know why. There is a green bar at the bottom of the video. You'll have to ask live stream. But the stock market has gone up and up and up for decades, okay? So for decades it's gone up. And yet, at the same time, we've got people, 93% of people who trade, I should say who actively trade, lose money, okay? Because they're not buying or selling a business. See, Warren Buffett looks at it differently. Warren Buffett talks about buying a business. He says, I'm buying General Motors at $42 billion, okay? And if you're buying General Motors stock, instead of saying I'm buying it at X stock price, let's say it's $68, say I'm buying it, I like General Motors at $42 billion. See, Warren Buffett is the most successful investor in history, as far as we know, because he thinks about buying businesses. He thinks about buying a company. And think about this. The company's business outlook didn't change in the last 5 minutes, yet their stock price did change because lots of people are getting in and out of stocks. Now, here's the question. Has the business climate, has the business outlook in America, okay, and especially that affecting commercial and residential real estate, has it changed in the last 8 days? Because the stock market sure changed. The stock market has taken a huge change, a huge hiccup, as we all know, in the last 8 days. And people have lost a lot of money. I have a friend who is trading foreign exchange, and he lost some enormous percentage of his portfolio because he was actually making money for 3 straight years. He was actually trading in the 90 percentile of positive trades, like 90 positive versus every 10 negative, and he was killing it. The coronavirus hit him completely out of nowhere, and he lost, and he did not hedge. He did not do a few things he knew better to do, and he lost an enormous amount of money in the last 5 weeks from the coronavirus, long before the stock market went down. And so my question is does the American economy, does the American outlook for business changed? Has the 10, the 20, or the 30-year outlook for business changed in the last 8 days? No. You don't buy a farm based on today's headlines, right? You buy it thinking about how you will have a harvest over 3 to 6 to 9 months, and how you will do that for decades, and how your children will continue it, right? That's how Warren Buffett buys businesses. And that's how many commercial real estate investors think as well. People make stock picks in minutes, but you wouldn't buy a self-storage facility based on today's news. You wouldn't buy a mobile home park based on what happened over the weekend in, like the Super Bowl winner. You wouldn't go to Kansas City Monday morning after the Super Bowl and try to buy an apartment complex there, would you? No. You're buying it based on underlying demographics and fundamentals. By the way, if you are into apartment investing, the new Harvard study on rental housing, it's about 40 pages long. I'm about 30 pages into it. It's really good stuff. But the problem with the stock market and the problem with other similar markets is people have short-term thinking. Warren Buffett has owned American Express. He bought it really, really cheap when he was very young, and then he sold it. I can't remember why he sold it. Matt, do you remember? But he sold it, and then he deeply regretted it. He bought it again about 20 or 25 years ago, and he's held it ever since. Okay? He's not buying and selling American Express based on the latest gizmo or the latest whatever. He is buying it because of its long-term prospects. And so that's my thoughts on the stock market. That's my thoughts on how commercial real estate is impacted by the stock market and the coronavirus. Now I'm going to take a few minutes, because it's still early in the show, to talk about how commercial real estate is valued. Now, commercial real estate, residential real estate, is based on comps. And as you all know, if you bought a house for $200,000 in a $250,000 neighborhood, and you added $10,000 to it and tried to sell it for $250,000, you might be able to do that based on those $10,000 improvements. But if you added $500,000 to that house because you really liked gold-plated fixtures, you really liked a finished attic and a finished basement and a huge addition, and some really high dollar some latest fad fence around it, you're probably not going to get that money back out of it. If you try to sell it for $700,000, then you got $700,000 in it, you're probably going to lose money. And I think every single person on here knows that. And that's because residential real estate is based on comps. Commercial real estate, on the other hand, is based on math. Yeah, math. Now, you may not like math in school, but if you're in commercial real estate, you're really going to like math, because the math goes like this. The value of the property is the income, the net income, divided by the rate of return. More specifically, the value of the property is the net operating income divided by the cap rate, or the capitalization rate. Okay? And so if you are buying commercial real estate, you can do certain things. You can pull certain levers to increase the net operating income. And if you can increase the net operating income, then you can directly increase the value of the property by that same ratio. But if you have leverage, you can make it even better. You can increase the asset value by 20%, but you might be able to increase the value of your equity by, say, 60%. And so it's pretty powerful. Let me tell you one thing I forgot to mention a few minutes ago. By the way, I want to welcome Matt Ricciardella. Matt is Going under the name Jessica Ricciardella for some reason. I'm just kidding, Matt. Sorry, I just had to say it. So seriously, one of the literally the national experts on commercial real estate investing, and I'm saying that based on his track record, which is phenomenal, is on with us today. It's Jessica Ricciardella. So if you guys have a question, you guys and gals have a question, ask Jessica Ricciardella. Matt and Jessica are an amazing team. They run Crystal View Capital, and their returns have been almost hard to believe in the last many, many years. And so I invest heavily. In fact, I made a large investment with my IRA, and my company, Wellings Capital, invests with Matt and Jessica at Crystal View Capital. So, seriously, if you guys have a question, if you have a question on residential real estate, ask Dude Real Estate. If you have a question on commercial, especially self-storage and mobile home parks, please ask Matt and Jessica Ricciardella. Okay, so if you have we talked about the math. So the value is the net operating income, which is the operating revenues minus the operating expenses. That's the net operating income, the NOI, divided by the cap rate. And the cap rate has actually compressed a whole lot over the last number of years as the market continues to get more and more saturated with commercial real estate investors who are willing to take a lower return to buy into this very, very coveted asset class. Did you know the Forbes 400, almost all the wealthiest people in the world own commercial real estate? Many of them got wealthy that way. Others continue to keep and grow and protect their wealth through commercial real estate. So anyway, if you bought a house for $200,000, add $500,000 in improvements, you're not going to get the $700,000 back. Did you know last week, and I wish Matt was with me here and he could tell the story, Matt and Jessica and their company acquired a mobile home park in an undisclosed location that I invested in. My company, Wellings Capital, invested with them for $7.1 million. And that was about 11 days ago. 6 days later, last Wednesday, right in the middle of the market chaos. Now remember that, right in the middle when everybody was saying the sky was falling, okay? Right in the middle of that, they got an offer on that same property. 6 days after buying it for $7.1 million, they got an offer for $9 million. And I've got a copy of that offer here because I invested alongside Matt in that. And Matt and Jessica said no. Why would they say no? Because of math. Because the math told Matt and Jessica that if they made 3 really important changes to that property, that property would be worth 12 to 14 million. So of course they turned down the 9 million. Now you may think these changes must sound incredibly hard, incredibly expensive, and insurmountable, but I'm going to ask Matt right now to think, Matt and Jessica to think about what those changes cost. And I'm going to guess, and I'm going to get in trouble here for guessing. So they're going to go around to the 300 or so lots at this mobile home park, and they're going to add water and sewer meters. Okay, so I'm guessing that's $300 each. So $300 each times about 300 lots is roughly $100,000. They're also going to raise the lot rent up to the market level. Now the market level is much higher than their level. Now why did that happen? Because he bought from a mom and pop operator, probably a wonderful person, but a person who lived several states away and had not visited the property in about 5 years. Okay, so it was the spouse passed away and the remaining spouse, the husband or wife, had not been to the property in about 5 years since his or her spouse passed away. Okay, so they're gonna, the rents were below market level, so they're gonna raise those rents. Now, I don't know what the rent levels are, I'm not gonna say if I do, But let's just say they're $300 right now, and let's say they raise them to $350, okay? That's a gross revenue improvement of 50 divided by 300, that's 1/6. I'm guessing that's about 15%. So they're gonna raise the rent about 15%, for example. Now, if you raise the rent 15% and you keep the costs the same, that means your net operating income is going to go up over 20%, which, using our math, net operating income divided by cap rate means the value of the property will go up 20% as well, okay? But that means if there's 50% leverage on the property, your equity will not go up 20%. The value of your equity, your investment in it, will not go up 20, but 40%. In other words, double, okay? So I hope that makes sense. And that is a way that math can work. Oh yeah, the third thing they're going to do is fill empty lots. Now, a mom and pop operator often doesn't have the desire or the knowledge or the resources to fill empty lots. It's quite expensive, but a professional operator like Matt and Jessica can fill those lots. They can go in and they can buy mobile homes and they can put them on those empty lots. And that's a significant, if there's 10% vacancy and let's just say they fill 5 of it, that's going to be a significant increase in revenue because they're going to be filling those lots with new homes. Maybe they can charge a little bit more, and so they can likely increase the revenue on the park by at least 5%, and that would increase the profit by, I would guess, at least 7%, and that's increasing the equity value by at least 14%, because remember, leverage comes into play. And so I'm going to circle back to the water and utilities. Pretty cool. The water and utilities on this property are probably running, I have the number, but I don't have it right in front of me, about $200,000 a year. Let's do the math on that. $200,000 in water and sewer passed back to the tenants. $200,000 divided by a cap rate of about 6%. So that's 200,000 divided by 0.06. Remember, our value formula is net operating income divided by cap rate. 6% would be a good number to use. $200,000 divided by 6% is between $3 and $4 million. I just did it in my head. I didn't actually calculate it. But $3 and $4 million increase to a $7.1 million property, that's going to take the value of that property up to 11 or 12 million. Nope, 10 or 11 million dollars. Is that right? Yep, 10 or 11 million. And then the other improvements. And that's why Matt and Jessica think they can get 12 to 14 million if they just make these 3 changes. And none of the changes are hard, and none are things that they haven't done before. And so that's the power, my friends, of commercial real estate. And so I am thrilled out of my mind to be investing in this mobile home park. And the cool thing is our fund, the Wellings Income Fund, number 1 last year and number 2, the new one this year, are both going to be investing in this particular mobile home park. Even though we already purchased it, Matt's a nice guy and he's going to let us invest in it at this time. So pretty cool. All right, so that is a very quick overview of why Matt and Jessica and my family are sleeping really, really well in the stock market meltdown, in this coronavirus chaos. So what I'm going to do is I'm going to throw it open to questions. Now, you all have been amazing. You're already asking and answering questions. You've already been doing that for the last 25 minutes. But if you didn't get a question answered, I'm going to ask you to do something. Hit Control-C, copy the question, then hit Control-V and paste it back into the question bar. And Matt and Jessica and Nate and I are going to try to answer all your questions for the next 35 minutes. So, I actually took Spanish, but I can't read that question, Kali. So maybe I need to get Google Translate, but I can't get it right now while I'm on this show. Okay, so I'm sorry. Yeah, Wealth Gainer says 234 watching live. Let's get at least 100 likes. That's so nice of you. Thank you. That'd be amazing. So looks like Monica Holden is from the Elite Legacy Builder. Hi, Monica. Welcome. Nick Castellano. Okay, I'm trying to read the questions in reverse order, which is stupid. So please put in your new questions, and Nate and Matt and Jessica and I are going to try to answer all of your real estate questions. I usually get questions on asking, hey, I'm brand new, I don't have a lot of cash, what can I do? But I haven't got that question yet, so I'm not going to answer it. That was baiting somebody to ask that question, of course. All right. So Julie Anderson said Washington State declared a state of emergency. 10 schools are closed. Any hints as SHTF? Yeah, I know what that means. Julie, I did hear the tragic news that 4 people, I think it was, in one nursing home just passed away from the coronavirus. So I imagine there's a lot of fear and chaos there, and I'm really sorry. And our thoughts and prayers go out to Washington State and the rest of the country as well. Hicham Farid, hey Hicham Farid, thanks for joining us. Joe Monterrazzo says, I'm brand new, I don't have a lot of cash, how do I get started? Joe, I knew somebody would ask. Thank you for asking. One thing I would do is I would really try to jump into wholesaling lease options. It's a very easy way, time-consuming thing to do, but it's a way to jump in and make some money quickly without having a credit score, without having to invest a lot of your money. You're just investing time. So I would wholesale lease options. I'd also do lease option sandwiches, also known as rent-to-own sandwiches, also known as subject to. And if you guys reach out to me, I do not have it in front of me, but I know some resources on everything I just said. I can get you some resources on wholesaling lease options, rent-to-owns, and subject to. You can also do Airbnb arbitrage, okay? Airbnb arbitrage is where you rent an apartment, you set it up real nice, put the utilities in, then you put it back on Airbnb, okay? You can also do corporate leasing arbitrage, where you set that same exact apartment up to do 3 to 6 to 12 month leases, and you can make a lot of money doing that. I have friends. I have a friend in Sacramento who trains people to do this. His name's Al, and two guys I met at the Bigger Pockets conference in Nashville last October said they were grossing $70,000 a month doing this, and they had full-time jobs. They were doing it on the side. They were netting about $30,000 in their pocket every month. So pretty amazing. So Hikam Farid said, what are the financing channels you advise for the new starter? Yeah, you know, I believe it or not, owner financing is really hard to get, okay? It's really hard to get somebody to owner finance, but you can do a lease option sandwich, a subject to mortgage, or a wholesaling a lease option. Those would be what I would do if I was brand new. If you do need financing, I would go to the smallest local bank you can, because even a small bank has access to millions of dollars, and they have they're way easier to deal with, way less restrictions, way easier to get to convince them that they should work with you. My son was in college. He hadn't even graduated yet, and he went to a local bank and convinced him to loan him hundreds of thousands of dollars to do real estate deals, and now he's making a lot of money, and he's still working with that same bank. But it's a very small local bank. You wouldn't even have heard of it if you lived an hour from my town, okay? That's the kind of bank. Or credit union you want to work with. I've worked with credit unions a lot as well, and their rules are way more easy. They're way easier to navigate than, say, a Wells Fargo or a big bank. I have nothing against the big banks, but if you're a newcomer to the field, you're going to want to get a credit union or a local bank. Are there any, ML says, are there any markets that have duplexes with 2-car garages under 500,000 and not in the boonies? ML, great question. I'm going to throw that open to the team and ask you guys. Does anybody know a market like that? I don't know of any. Nate Shields is in Madison, Wisconsin. Maybe he knows some. Madison's a great place. Teresa Heffley says, okay, she's talking to Nate. You're very interested in getting started. Hey, Teresa. So I'm Paul Moore, and like I said, I'm with Bigger Pockets and Wellings Capital. You can reach out to me at my company website or at Bigger Pockets profile, and I will get you information on all of that. It's really hard. You guys might just want to Google it. It's hard to get information on lease, option, and rent-to-own sandwiches and subject to. But there are some great folks. There is a Bigger Pockets writer, Chris Prefontaine, who does blogs for Bigger Pockets, and he knows all about that kind of stuff. You can check with him. There's also Joe McCall. Joe McCall comments a lot on Bigger Pockets. Joe, MCCALL, he does a lot of stuff with wholesaling lease option sandwiches. So there's two right there, Chris Prefontaine and Joe McCall. So, okay, what other questions do you have? You guys, we have a really rare treat here having Jessica and Matt Ricciardella on here. So if you have any questions about getting into self-storage or mobile home parks, those are things I'm very, very passionate about. They are the experts in that. I mean, literally, they're in the top experts in the whole United States, and I'm super privileged to have them on here. You guys can check them out at Crystal View Capital. Crystal View Capital, they actually work with Realty Shares, and people invest through Realty Shares crowdfunding in Crystal View Capital. So it may be something you want to check out. Ishan Patel. Hey, Ishan. Looking to move to Raleigh. Great place in July from New Jersey. Smart move. And buying a multifamily, living in one and renting out the others. Hoping for the market to flip to buyers. Anyone in the area? Okay. So if you want to get hold of Ishan Patel. Ishan, I don't know if I'm even saying your name right. What do you do now, and why are you moving to Raleigh? It's a great move, but just curious. Louis Schmid says, what's the best approach to trying to find the best deals when restricted with time constraints in 1031 exchanges? Matt and Jessica Ricciardella, you may want to take that, and I'll get back to it if you don't get a chance to answer. Christopher Bland says, there's a county in my area with homes listed for $40,000 and below. Seems like my ROI would be good, but the school district is nothing special. So Christopher, Bigger Pockets has rental house calculators. If you're not a Bigger Pockets Pro member yet, you may want to try to join the Pro or Premium plan, but you want to definitely get access to those type of calculators. Some of the other books, some of the other things available with Bigger Pockets. I am going to defer to them. Okay, somebody asked about best options for 1031 exchanges. So one is a deferred sales trust, another is an installment sale, and a third is a Delaware statutory trust. You're going to want to consider a Delaware statutory trust. Would you be able, who asked that? Okay, Lucas, could you tell me, you may not want to share this publicly, but can you tell me approximately how much money you have available? That might help me answer you better. The Delaware Statutory Trust would be definitely one I would look at. That's what I'm looking at right now to help people with 1031 exchanges. Key to Lifestyle, how are private credit cards that lend and charge $3,000? I'm in Raleigh and I can help you buy. Oh, okay. So it looks like there's two separate things there, but Ishan, looks like there's somebody from Raleigh who said they can help you. Okay, Jessica Ricciardella says, DSTs may work for 1031 exchanges when you're in a time crunch. Absolutely agree. Thanks, Matt and Jessica. Dude Real Estate. Okay, you're answering somebody else. Okay, who has another question? Guys, I could talk about self-storage and mobile home parks all day. So I could jump back in and do that. But love to see you guys ask some more questions. Lucas says, the sale of the original property might bring $400,000. So Lucas, yeah, I would consider an installment sale or a deferred sales trust. They really want to be at $500,000 or above. So I would consider a Delaware statutory trust. You can also take your $400,000 and partner with somebody who has another real estate deal. That would be another thing to do, to partner with somebody else. But don't let the tax tail wag the dog. Do not overpay for overpriced multifamily. My friends, I'm talking to all of you, but I'm especially talking to Lucas right now. El Hajj Ba says, hello, I'm working on a syndication deal as a general partner with a couple of investors. As a newer investor, what are some things I should be aware of? You may want to reach out to me and get on my calendar. There's a lot of pitfalls with that. There's just way too much to even go over right now. I'm so sorry. Self-directed IRA, someone asked about that. Highly believe in those. Favorite books for starters. Brandon Turner's books, excellent. We've got Amanda Hahn's new book on taxes is excellent. Brian Burke, my friend from Praxis Capital, is getting ready to put out a book on due diligence. There's a great book by Steve Burgess called The Complete Guide to Buying and Selling Apartments. I'd highly recommend that. Thank you, Matt and Jessica, who answered El Hajj Ba. Any thoughts on the SD, self-directed IRA and non-recourse loans, a good way to scale? Yeah, I mean, you can get SD, self-directed IRA investors to invest with you as long as you have non-recourse debt. It can't be recourse against the investor, at least. I think it's a great way to scale. There's a lot of money in pensions, 401k plans and all kinds of things that is invested in places that would love to invest in real estate deals if they only knew. If they only knew what was available, they would do it. And that's the truth. But they don't know. So it's your job to go to the local real estate meetups, go online here at Bigger Pockets, go basically teach people to invest in real estate rather than having their money tied up in the Fidelity Magellan Fund, nothing wrong with that, or mutual funds or other things. So someone is asking, okay, Bernardo Charles says, what's the name of the book on buying and selling apartments? Okay, it's from Steve Burgess, Berges, and it's called The Complete Guide to Buying and Selling Apartments. And I think that's my favorite book on apartments. I wrote a book on apartments as well. You can find that on Amazon. What is the best type of, but Steve Burgess's book is way more thorough, I think. The Complete Guide to Buying and Selling Apartment Buildings is the actual name. And his last name is Burgess, Berges. The Lapita says, who can set up an IRA self-direct account with check writing authority? Okay, I can answer that. You're going to want to go to Dmitry Fomachenko. Okay, find his contact information on Bigger Pockets. Dmitry. That's his first name, Dmitry Fomachenko. Fomachenko. Okay, he sets up IRAs, and he has a special for Bigger Pockets Pro members. If you're a Bigger Pockets Pro member, you can get a discount, but his prices are already so good, you might not even want to ask him for a discount. Seriously. Highly recommend you go to him. Gene LaLawyer, hey Gene, says, hey Paul, I'm 100% new to this, but my goal is to get at least one rental property, like a single family home. Why shouldn't I go bigger? Like apartments. I have a book that actually recommends you skip over all the noise and go bigger into large scale apartments. And the problem is right now it's extremely hard to get a good deal on a large, medium, or small apartment building. It's extremely hard. And so because of that, I don't think that you necessarily are going to get the best deal, okay? So it's a really, really hard time to do that, Gene. Now, if this stock market and this virus thing continues to scare people to death, there may be deals on the horizon. Yeah, like Dude Real Estate, Nate Shields says, partner with somebody who's already done it. Don't try to start large scale apartments out of the blue. Just, you need to get with somebody who has done it. My new book on self-storage investing, which is going to be published by Bigger Pockets, has 7 ways to jump into bigger levels. And so, Gene, if you can wait for that new book, there are 7 paths to get to the larger size. Lewis says, best recommended option available. Should I, 1, partner with my $400,000 proceeds, 2, buy my own 1, 2, or 3 single family rentals, or 3, $400,000 down payment on a multi-unit apartment? That is so tough, Lucas. It depends on what your long-term goals are. I don't know. I mean, are you going to be jumping into this full time? Are you going to do it on the side and keep a day job? Do you want to start small with maybe a small self-storage facility? Maybe you can buy $1 million self-storage facility with the $400,000 down and really fix it up and then upgrade it and then sell it and go to the next level and the next level. That might be something. There are more self-storage facilities and there are more mobile home parks available than there are most other asset classes because there are more mom and pop investors, owners in those fields. And that's why I invest with Matt and Jessica Ricciardella, because more than anybody in the United States, and I literally think I'm telling the truth here, I hope I'm not exaggerating, more than anybody in the United States, they know how to find mom and pop sellers of these assets. And that's why I love to invest with my friends at Crystal View Capital. Jim Marco says, when's your new book coming to hit the shelves? We'll have to ask you Bigger Pockets, but I think it's going to be May or June. If you reach out to me separately, we are going to be looking for, I can give you more information on that. Jim Marcos, okay, Joel Pereira says, I keep hearing the chances are low of getting a good deal unless you're on the buyer's list. Yeah, that's probably true if you're talking about brokers. Ishan says, I'm handy and can do big remodels, so I was thinking to get some help and can rehab a multifamily and live for free while doing that. Okay? Crestos Hyper says, Ishan, I'm sorry, I might have missed an earlier comment, so I will let that one go. Crestos Hyper says it's better to work a 9-to-5 job and invest in real estate, or work as a real estate agent and invest in real estate. I would absolutely recommend you become a real estate agent if this is your passion. Crestos, then you're in the market. You can also become a qualified real estate professional. A QREP is somebody who works, they make over half their income from real estate. They work over 750 hours a year in real estate, and there are a few other qualifications you have to hit, but you get massive tax benefits from being a QREP and being a real estate agent. That won't automatically guarantee it, but it will help you, and it'll also get you in the market. So you're there when the right deal comes along. What's that sound? It sounds like a fan. Any way to clear up that sound? I don't know. Thanks for asking, though. It might have been me cleaning my glasses. Okay, Ted C. Okay, he's talking to Dude Real Estate. All right. Well, I think we're getting close to the end of the questions. Joel Perea says, looking for flips in Florida, can I expect good deals from a wholesaler? Or continue to look for deals on my own? You know, wholesalers they're a good source for deals. but they're going to be marking them up right to the level where it's almost not workable. So you may want to consider, and I don't want to frustrate you by telling you that, but you may want to consider looking for deals on your own. How could a property go down in price when the cap rate expands in commercial real estate, or when there's just a general level of fear and anxiety, or just the properties could go down in price for sure? Okay, so ML says whatever the sound is continuing. I have no idea. It's absolutely quiet in this room. No, don't hear anything. So sorry, it's beyond my control. We're going to wrap up in a minute anyway. Key to Lifestyle says, how do I get the QREP? Go look that up. It's Qualified Real Estate Professional. And you can actually find that in the IRS tax code. So I would put IRS code Qualified Real Estate Professional, and I think you'll find it. IRS has very good stuff on Google, by the way. So does it affect the rent price if the house property goes down? Not always. So the price can go down and the rent could stay up. But generally, if you're in a market with falling house prices, you're going to often get really falling rent prices as well. Falling rents as well, I should say. By the way, if you haven't got it yet, you should check out the new Harvard study on rental property. I don't have the link to it, but you can just Google 2020 Harvard study on rental real estate. Very powerful. Jamel Hook, hey Jamel, says, I started real estate investment with 5 friends. Is BRRRR a good strategy to start? Yeah, I think it's a great strategy. I think it's a definite way to go. There may come a time when you want to trade in all your small multifamily and single family though, and get into the large scale apartment complex level. That's what I would recommend. And Nate Shields, Dude Real Estate, says the same. Mac Tracks official channel, is now a good time to start investing considering the time of the state of the economy? I don't think it's a great time to be buying single family or any multifamily, and that's why I quit a number of years ago. It's a great time to buy certain assets, recession-resistant assets like self-storage and mobile home parks from mom and pop sellers, because mom and pop sellers are often providing properties at a better price that have significant upgrade potential. And you can learn more about that in my ebooks on self-storage and mobile home park investing. And so that is what I have a huge focus on, that exact issue. But multifamily, some people used to, some multifamily used to be that there was a lot of room for upgrades, a lot of room for improvement, a lot of room to increase your wealth with it. And a lot of people have made millions and millions of dollars in the last several years. But right now, it's pretty hard to find a good deal. Crypto Life 101 says, do you remember what was said in the Harvard study? Lots of things were said. There was dozens of things said. One really interesting thing is that the $75,000 and up income earning quintile, I didn't say quartile because there are 5 parts of it. So there's the under 15,000, there's 15 to 30,000, there's 30 to 74.9, there's 75,000 and up. I think I missed one. But anyway, the 75,000 and up are renting a lot more than ever before, and it's kind of shocking. But there's a lot of other things said in the study as well. It's also saying that average vacancy in the United States is 6.8%. 6.8%, which is really good nationally. Abraham Flores says, hey, it's Abraham. Hey, Abraham. I have a chance to buy my grandma's property, but I don't know how to get a loan or how to get started. I'm 23. Well, congratulations, Abraham. Great job. Go to your local credit union or very small bank. That's what you're going to want to do. And if they won't fund you, come back and tell us why. Because if they absolutely won't fund you, there may be a reason. There may be a good reason. So, Muscle Mixer says, what about beach properties in high tourist area? Airbnb is good, and it can still be a duplex. People still go on vacations. Yeah, I don't know anybody, honestly, who I don't know anybody who's really heavily into beach properties and that type of thing. So I don't know how to answer that. I think it's got additional risk. I mean, think about the opposite. Imagine workforce housing in a town with a lot of industry. Sorry, I'm yawning here. I didn't get enough sleep this weekend. Think about workforce housing. It's probably going to be steady and stable through any economy. I think beach properties might go up and down. I would just guess. What do you all think? Okay, it is 8 minutes till the hour. Unless there are any additional questions that pop on here in the next minute or two, Dude Real Estate, Nate Shields, and I are going to wrap this up for the day, and we will see you next time. So, folks, thank you so much for joining. If you have additional questions, I do a 30-minute call on Wednesday at noon. If you feel like you didn't get your questions answered, please link up with me on Bigger Pockets. Again, I'm Paul Moore with Wellings Capital. You can link up with me at Bigger Pockets, and I do a free call on Wednesday just to dive in a little deeper. It's on my toll-free line. Crypto Life 101 says, do you recommend selling your property outright, no debt, and holding the cash until the market drops, or do you keep it as a rental indefinitely? That's a tough question. You could do either. I mean, it depends on your goals. If you're trying to build a rental house portfolio, you may want to hold on to it. If not, there's going to be a time, we just don't know when it's a good time to have cash. So think about that. Dude Real Estate, Nate Shields, actually does some training as well. And Dude Real Estate, Nate Shields, is one of the top writers, one of the new writers at Bigger Pockets. And so if you need some help, check out Dude Real Estate and his articles on Bigger Pockets. Pretty awesome. Check Phil Petoskey for beach properties. Okay, that's really cool. 20 to 45% cap if done right. Thank you, Mr. Nephew 8. I really appreciate that because I don't know about that. Joel Perea says, could I get properties from a wholesaler or on my own for flips? Yeah, either one. Obviously, you're going to make more money if you get it on your own because the wholesaler's not going to be in there, but you may not have the expertise. Crestos Hyper, what advice for beginners? Again, I would say lease option sandwiches, rent-to-own sandwiches, rent-to-owns, wholesale lease option notes, wholesale lease options. That's one you haven't heard me talk about. That was put out there by Joe McCall. He's on Bigger Pockets. And also I would do Airbnb or corporate rental arbitrage. And you can learn that from a friend of mine named Matt. Okay. No, named Al. Okay. Thank you, Carl Benjamin. Thank you, Dark Matter. Thank you, everybody. Thank you, Dude Real Estate, Nate Shields. I can't believe I get to do this. I can't believe they still let me do it. I really appreciate the opportunity to spend this almost hour with all of you all. And I really look forward to connecting with you again next week. Have a great week, and we'll see you next time at Bigger Pockets Live. Take care.